Welcome to Access a Trader, the #1 community for those who are committed to taking control of their trading in order to achieve success, profitability, and longevity. Thank you for joining us. Here's Dan Shapiro to help you find your edge, master your process, and own your future.
Hey guys, good morning everybody. Welcome to another edition of the AccessATrader.com weekend update show. Hope everybody is doing well. Hope everybody is having a great start to their weekend. Hopefully everybody's trading well. And that's the most important part, having a balanced life, having happiness, your professional life, and everything be equal so you can enjoy the process in everything that you do. So let's talk about the market, right? The previous 2 weeks, we saw a pretty aggressive sell-off, about a little over 8% in total in the NASDAQ 100 in the Qs, and it resulted in a loss of the 50-day moving average. And the 50-day moving average, obviously, if you've been watching the video, is a sell signal, right? It's a very, very aggressive sell signal because, again, you are losing a pretty aggressive intermediate support, right? And that's exactly what happened here. And we pretty much went down for about 2 weeks. It's pretty much the opposite of what happens when you reclaim the 50-day moving average. You start moving higher as well. So it was super important. And if you've been watching these videos week in, week out, like day in, day out, you kind of know, and I keep on echoing the point, the longer the bulls let the bears build underneath the 50-day moving average, you're going to have a higher probability of stronger pushes back to the downside with a longer duration. That's exactly what happened going all the way back to April, when we saw a 2-week build, and then next thing you know, we had a really big aggressive 5 to 7 month decline. So it was super important for the bulls, to kind of get their legs back, to kind of get to the point of, hey, I'm not going to just sit there and let you build underneath the 50-day moving average. I'm not going to let the sellers control the narrative. We're going to come, we're going to step up, right? We're going to step up and we're going to make a stand and we're going to fight back, right? Just like Rocky did with every opponent in every Rocky series. You get knocked down, you look like you have a bloody mess. Your eyes are swollen, your nose is broken, your chin is dislocated, everything is bad, but you get up, right? And that's the whole point. And that's what the bulls did compared to the last time that it lingered for 7 months. And with this 8% decline over the last couple of weeks, the one common denominator has been over and over again is every single rally, literally every single rally was stuffed. And the market went lower. It's like over and over and over again. And then this week, for whatever reason, again, you could talk about Fed, you could talk about whatever you want. Doesn't make a difference. Something was just a little bit different. Every single time, especially when you got to like Wednesday, and this is kind of where the market started reversing a little bit. Once we got to Wednesday, there was a little bit of a gap up, and then they took the market down pre-market. And you started seeing the names, the technology names like Tesla, like Snow, for example, like Amazon, for example. They just stopped going down. They weren't going up, but they stopped going down. And as the week started progressing, we started seeing them build over those prices slowly, right? It wasn't anything dramatic. And then finally came around to the point of Thursday, they started getting more and more aggressive. And it started getting more aggressive on the Apple event. If you guys remember, I think it was the video on Wednesday, right? The Apple event came. It was a very uneventful day prior to that. The market was down a little bit. It was up a little bit. It was really nothing, right? People were kind of just getting their cues from the Apple event. And slowly but surely, once the Apple event was over, and it's irrelevant kind of what they talked about, that's when the market started moving higher. That's when stocks started taking out the previous day's high. And the first time we got above, if you guys remember, I think it was the Wednesday video, we talked about that 296.60 level. That started a cycle. Again, nobody talked about, well, this is going to be the bottom of the market and now we're going to go back to highs. But we started talking about slowly, baby steps. Because again, we referenced in every single video, there's always enough bullish cycles, right, in a bear environment. So you can't assume that every bounce is going to be the bottom, and you can't assume every bounce is going to be just a dead cat bounce to kind of roll over at another day. So again, this is kind of our philosophy, day by day, trade by trade. Again, I've said this in every video probably in the last 12 years that we've been doing this. I have no idea, right? I mean, look, who the hell knows where the market's going to go to the next day? We're just literally taking it day by day, trade by trade, and taking the analysis that we're getting on the 4 o'clock close to base our opinion for the next day. So all these lines that a lot of new traders deem to be irrelevant or annoying or completely trash or they're kind of important, right? They really are, they really are kind of important. The more data you have, the more supply and demand zones that you have, the higher probability you kind of understand where the dangers lurk. So again, you are not guessing. You're not really understanding, you're not trying to figure out where the closing price is. You're just trying to figure out where these, where these supply zones are. If the market continues to build over the supply zones, the next apparent supply zone is the next measured potential. And that's all we try to do every single day. And the one cool thing about what we saw into Friday's session was we knew how important that 10-day moving average was, because that's, again, if you've watched any of my videos, that's what I call the birth of the trade, right? The 5-day moving average is the shortest term sentiment. The 10-day moving average is the birth of the trade. And then we talked about the possibility on Thursday's video, the possibility of maybe attacking the 50-day moving average at some point during the week. That happened yesterday, right? That happened on Friday. And the most important part of yesterday's session was initially the 50-day did get rejected, right? We saw that move come into that 306.50s, 307 level, and the market got rejected. But the craziest part about that rejection was, if you guys remember the previous day, right? We actually talked about it on Thursday's video. The previous day, when the 10-day got rejected at 302, there was, actually, let me just show you guys instead of telling you. Let me just show you guys really quickly. So here was the 5-minute view, right? This is what happened on Thursday's session, right? So the market got stuffed. The Qs got stuffed at 302 on the 10-day moving average. And what followed was a $5 destruction, right? Literally a $5 destruction at lunchtime. Very, very violent, very, very aggressive. The one thing that we noticed right away from Friday's session was when the 50-day got tested, they walked it down. If you guys remember that, right? They kind of walked it down from that 306.50s, 306.60s level. They walked it down to like 305.70s. And you could see there was no aggressive tone compared to the previous day's violence, which, by the way, the Bulls reclaimed back off the lower channels. And then slowly but surely they started walking it up. And once they reclaimed the 50-day moving average, that was the green light, right? At least for Friday's session, that was the ultimate green light. And it was a very, very super bullish close, because now we reclaimed the 50-day moving average, not only on the Qs, but we reclaimed the 50-day moving average on the SPYs and on the IWM, right? So it's very, very bullish, at least on paper, right? At least on Friday's close, that everything did what it had to do. The Bulls finally got off the mat. They reclaimed the 50-day moving average. And again, like you could look at any single index, and this is the IWM for now, right? Look at the last time they reclaimed the 50-day moving average. That was the blue line, started a month rally. So again, we reclaimed the 50-day moving average. So now the key is, and the question is, can they confirm? Because it's not just as simple as, okay, now we reclaim the 50-day moving average, buy everything in sight, maximize your buying power, and just go long for the next X amount of weeks, X amount of months until the market loses the 50-day moving average, if it does that as well. No, that doesn't work that way. Now that we're above the 50-day moving average, now we have to confirm it. So if you look at every single index, you're going to see exactly the same thing, right? So the Qs are above the 50-day, and there is supply here at 308. Everybody see that, right? There's supply here at 308. Let me just stretch this out. You can see this 308 little area, right? That's the 20-day supply. So for the Qs to stretch and for this market to be meaningful, we need to build a close, right? Build, price action. A lot of new traders asking, what does build mean? It's price action off that level. So if the Qs want to rally, if this market has any type of legs, we have to start building. The price action has to start trading, putting in a new base above 308 to get to the next supply zone, which is 312, which would be super bullish. The IWM. Right? Same thing. It stopped at supply right here. You can see it stopped at the purple line supply, the same where it stopped here. So now the IWM needs to build above this 187.60s level to get to 189, 190. Again, step by step, baby steps. Again, nobody's predicting 202. Anybody's talking about, well, now the IWM is going back to 204. Based on what? You're guessing, right? No, if technicals confirm, well, the next step is 189. Doesn't have to get to 189 before it gets to 204. Again, Learn to walk. Learn to walk before you run. Again, there's no reason to predict. You don't need to sound smart. Everybody understands this game is for morons. We're morons. We're idiots. We're Neanderthals, right? We're not guessing what's going to happen 3 weeks from now. We just need to know what happened on Friday and where's the next possible area where it could get to on Monday based on the 4 o'clock close. And if you look at the SPYs, first time they tested that 3,900 in a while. They got off the mat. Again, same thing. SPYs a little bit more cloudy. You can see here, there's a lot more supply zones here, right? You can see 408 and change. There's supplies. There's a lot more trees to the forest. And that's kind of what we start talking about going into this week. So now that we know that we got a very bullish close, okay, we also know that number one, on Monday for the bulls to confirm, they better not lose back that 50-day moving average on all the indexes, or else that's gonna be a problem. And we're gonna have a completely different conversation on Monday night's video. But assuming they follow through, right? Assuming they follow through. The key to what's about to happen next is realizing two things. Just because stocks are above daily supply, or at least the ETFs are above daily supply, understand that we went down very, very aggressively for several weeks, right? For even, you can make a very aggressive case. We went down from, for about a month. So a lot of these stocks really got decimated. So it's not going to be one of those scenarios of, oh, that's it. You can buy any stock at any price. We're over the 50-day moving average. Look, I just heard this idiot talking about this on the weekend update, and everything is good. Just buy everything in sight. It doesn't work that way. You still need space. You need airspace. If you ever watched the PS60 workshops, I refer to something called the Barry Sanders effect. And for what you guys don't know that, and again, this is opening weekend of the NFL. I'm going to the Jets-Ravens game, opening day in the rain. It's going to be awesome. I'm going to be watching a 6-3 field goal game. Can't wait. Anyway, but taking that aside, the Barry Sanders effect, for all you guys who watch football religiously like I do, or for all you guys who don't, Barry Sanders was one of the greatest running backs in NFL history. And he used to play on one of the worst offensive teams in his era. No offense to you Detroit Lion fans, but you know I'm right. And they had an incredibly terrible offensive line. So basically what happened was he would have a carry, right? And he would get stuffed for 2 yards. He would have another carry. He would start for 3 yards. So you look, for example, at the end of the first quarter, he would have 4 rushing yards, 4 carries or 5 carries for 19 yards. And then you look up and you turn around at the end of the game, he has 17 carries for 116 yards and a touchdown. And the reason why that happening is every single carry that he's getting, right? The offensive line was opening up more holes. And eventually that one hole got bigger so he could finally take it to the house and score the touchdown. That's kind of where we are right now in the infancy stages of this 50-day reclaim. Right now, we're just trying to push forward, right? Taking a carry here, 3 yards, taking another carry here, 5 yards, slowly but surely, and eventually we need that big move. Eventually, if that big move happens, is going to be this 308 to this 3012 area, because now we're talking about a $4 spread, right? We're talking about daylight, and that's exactly what any running back in the NFL, to be successful, they need daylight to possibly take it to the house, and that's exactly what the Bulls need as well. And if you're looking at a lot of charts, especially, and we'll talk about the technology sector in a second, if you're looking at a lot of charts, there's not a lot of daylight yet, right? Like look at Amazon. Correct? Let's talk about some names, right? Like look at Amazon. For Amazon to get daylight, it would need to close roughly about 35, right? If it gets above 35, then you have daylight to about 140, right? If you look at Apple, for example, right? Same thing. Look at this. There's no daylight. There's just literally one carry for 2 yards, one carry for 2 yards. So it's going to have to chop down some trees. For Apple to get daylight, it's going to need to close above 161 to really start stretching to 164. So our job, and again, there's a slew of stocks like that, right? You got Microsoft, you got NVIDIA, right? A lot of supply ahead because they got technically damaged. So our job this weekend is to find the stocks that have the biggest daylight. So when Barry Sanders gets the ball, we're not looking to prepare for a 1 yard move. We're not prepared to, for a 2 yard move. We want to look for daylight. And again, our job is to find those stocks. So if you go through your charts, it's going to be a little bit trying to find diamonds in a rough, and it might be a multiple day for your stock to finally get daylight. But again, isn't that what preparation is for? Isn't that the whole point of researching the night before and not waking up 3 minutes into the close and talking about, yo man, where's the hot stock of the day? You're already lost, right? You've absolutely lost. If that is your approach, waking up 10 minutes to the open and looking at the hot stock of the day, you lost. You're doing it wrong. I don't care what your approach is, you're doing it wrong. What you put into this business, okay, and that's going Friday chart work, Saturday chart work, Sunday chart work, right? Chart work, preparation. If you're not putting in the preparation, well, why are you shocked that you're not getting the results? And that's the whole point. Looking for those diamonds in the rough, looking for everything that can give you that value, the biggest bang for your buck. So if you're right big. If you're wrong small, because again, you could see how tight those channels are. And if you believe in technical analysis, right, that's the game. So instead of maybe looking at an Apple, and again, maybe Apple, look, if the market goes, Apple's going to go with it, but it's going to take 1, 2, maybe 3, maybe 5 days to finally get going. Look for the charts that have the spread, right? Look for the charts that have a clean window that potentially Barry Sanders and any other phenomenal, or Michael Carter from the Jets, of course, right, could have airspace and maybe take it to the house. And look at some of those names, right? Look at Tesla. Tesla has airspace, right? This was the one carry for 3 yards, one carry for 4 yards. Now Tesla got above the airspace, right? It got above supply. Look how much room you have. If this market continues, look how much potential room you have. Again, that's called the Barry Sanders effect. So instead of looking, for example, like a Boeing, right? For a Boeing that needs to chop down 4, 5, 6 days, maybe get above the supply here, maybe look at a name like ZS. Right? Look at ZS. ZS had great earnings, and if it just confirms this supply zone, look how much room you have ahead. So again, the point is finding those Barry Sanders potential plays that could take it to the house, finding those names that while everybody's trying to fight for 30, 40 cents, you're looking for a $3, $4 move. Again, look at Snow, right? Look at Snow. Right? Here is the Barry Sanders effect. 1 carry, 3 yards, 3 carries, 5 yards. And then all of a sudden, now it's above supply. You have room to 200. So the stage is set, right? The stage is set technically. The Bulls did a great job reclaiming major levels. The question is, can they confirm on Monday, right? Can they confirm without losing that 50-day moving average? Because if they can start building, right, price action over the next day's higher's close, right? That's when you start opening up daylight. And if you do get that daylight, we possibly could get into the end zone and score. And that's the only way we want to do it. Guys, God bless. We're set up. Again, if you're a new trader, again, it's the hardest business in the world. And if you haven't spent 50 times a day trying to convince yourself not to quit, you're not human. That's exactly what's normal. Don't put that's exactly what every single trader prior to you, after you is ever going to go through. And that first 3 to 5 years is your incredibly hard ability to figure out what's good data, okay? What's tangible information, and to trade off that's where you're building your foundation, okay? I don't care if you're trading for 10 years, if you keep on reiterating the point that 1 + 1 = 6, again, you're not getting anywhere, okay? You're trading off of terrible data. So the most important thing, guys, remember, it's all about time. Time will heal you, okay? Keep putting in that work. Even if you don't know what you're looking for, keep putting in that work. Eventually something mentally will click, and that's the most important part. Time will cure all. Don't put a lot of pressure on yourself. Keep the faith, work hard, and eventually everything will play out. Guys, God bless, stay blessed, and with God help, I'll see you all on Monday. Take care.